Hi, everyone. I'm Rick Barron, your host, and welcome to my podcast, That's Life, I Swear. FTX was once the shining star of cryptocurrency exchanges, and then in the blink of an eye, it all went to hell. In December of 2022, while vacationing in the Bahamas, the SEC filed charges against Sam Bankman-Fried and arrested him, alleging that he had defrauded investors in FTX. So what happened? Let's jump into this. Sam Bankman-Fried is a 31-year-old cryptocurrency entrepreneur who founded the crypto exchange FTX in 2019. Now, FTX quickly became one of the most popular crypto exchanges in the world, with over $30 billion in daily trading volume. As I said at the beginning, Sam Bankman-Fried was placed in handcuffs in December of 2022 while in the Bahamas. The SEC filed charges against Sam, alleging that he had defrauded investors in FTX by mixing customer funds with his own personal funds and had used customer funds to make undisclosed investments and political donations, which included such things as using billions of dollars in customer deposits to finance lavish real estate purchases, charitable donations, and crypto trading. Now, after arriving back in the United States from the Bahamas, Sam was granted bail and is currently under house arrest at his childhood home in Palo Alto, California. Now, here's some background about Sam Bankman-Fried and FTX. He's a graduate of MIT with a bachelor's degree in physics and a minor in mathematics. He once worked as a trader at Jane Street Capital before founding FTX, which, by the way, is an abbreviation for Futures Exchange. FTX was a cryptocurrency exchange that allowed users to trade various cryptocurrencies, such as Bitcoin and Ethereum. In 2014, Sam co-founded Alameda Research, a quantitative trading firm that used algorithms to trade cryptocurrencies. Now, under his leadership, the company became one of the world's largest and most successful cryptocurrency trading firms. Now, in addition to its trading activities, Alameda Research also provided liquidity to cryptocurrency exchanges, which helped stabilize prices and made buying and selling cryptocurrencies a whole lot easier. FTX raised over $1 billion in funding from investors such as Sequoia Capital, SoftBank Vision Fund, and Binance. Now, Sam Bankman-Fried has denied all of the allegations, and he is currently facing a court hearing scheduled for some time in October of 2023. Now, it's too early to say what's going to happen to Sam and FTX. The SEC's charges are a major setback for the cryptocurrency industry, no doubt. It could have a very chilling effect on the innovation in the space. Now, why does this matter? Surprisingly, the mountain of legal charges facing Sam Bankman-Fried and his once FTX empire may do little to dispel the regulatory fog surrounding crypto. Now, at first glance, the arrest, criminal indictment, and civil charges brought by the SEC and CFTC against Sam appear to be symbolic of putting to an end what the chairman of the SEC refers to as the Wild West era of crypto. Now, former regulators, legal scholars, and defense attorneys say that even if Sam Bankman-Fried is convicted of criminal charges and loses the civil cases, it's going to do very little to immediately change the standards in the U.S. crypto industry, where many companies don't comply with the financial regulations that other banks are held to. Timothy Massad, former U.S. Commodity Futures Trading Commission chairman and senior fellow at Harvard University School of Government, has said of crypto broker-dealers and exchanges, and I quote, "They do not observe requirements to segregate customer assets, to prohibit conflicts of interest, to have active procedures to prevent fraud and manipulation." End quote. Now, crypto players such as Coinbase and Binance contend that banking financial regulations just don't apply to digital assets. In short, they just show their middle finger to the SEC and tell them to take a hike. For years, efforts to regulate crypto have been debated over whether digital assets can be held under existing law, or whether new rules tailored to the technology are really needed. While researching the case against Sam, it appears, at least on the surface, the criminal case against him will do little to clarify the rules, perhaps in the short term. Iris Sorkin, a well-known white-collar criminal defense attorney, conveyed that the criminal charges against Sam center on fairly specific allegations of fraud, rather than technical questions about the nature of crypto. However, some say that the SEC's civil charges against Sam Bankman-Fried might shed some light, at least, on whether digital assets qualify as securities and are, therefore, subject to the SEC regulations. So where are we today? Federal prosecutors investigating the collapse of the FTX cryptocurrency exchange said in mid-June of 2023 that, at least for now, they're going to withdraw several of the charges facing Sam Bankman-Fried. In a court filing, the prosecutors said they would proceed to a trial in October of this year without pursuing 5 of the 13 charges, a set of accusations that the government added to the indictment in the months after Sam was extradited from the Bahamas in December of 2022. Among those charges was a bank fraud count and an allegation that Mr. Bankman-Fried bribed a foreign government. Sam's argument is that prosecutors should not have been allowed to charge him with additional crimes after his extradition. However, the withdrawal of the 5 charges came with a very significant caveat. The prosecutors asked the judge overseeing the case to schedule a second trial in early 2024 on those 5 counts. Poor Sam. He just can't catch a break. So what happens if Sam Bankman-Fried is convicted? Well, the guy faces a maximum of 115 years in prison. But that's highly doubtful he'll receive such a sentence, even if he's convicted on all those counts. Why? Judges have discretion in deciding the sentences, and after a verdict, prosecutors and the defense frequently argue over an appropriate penalty. This involves weighing mitigating and aggravating factors or reasons why a defendant deserves a lenient or a severe sentence. So what can we learn from this story? What's the takeaway? Sam Bankman-Fried, the founder and CEO of FTX, is now facing criminal charges in the United States for allegedly defrauding investors and misusing customer funds. One of the most powerful takeaways from this case is that even the most successful and respected crypto companies are not immune to fraud. FTX was once one of the most popular and well-regulated crypto exchanges, but now it is facing allegations of serious wrongdoing. That said, investors need to be careful when investing in cryptocurrencies, and they really need to do their homework before putting money into any platform. Now, having said that, various celebrities who were caught up in being FTX ambassadors and endorsing FTX are now facing problems of their own. People such as Tom Brady, along with his divorced wife, Gisele Bündchen, have been sued by a group of FTX customers seeking compensation from the celebrities who endorsed the exchange. As part of an endorsement agreement Tom Brady signed in 2021, FTX paid him $30 million, a deal that consisted almost entirely of FTX stock, and Brady's wife at the time was paid $18 million in FTX stock. On top of it all, the terms of the deal would have required the former couple, who divorced last year, to pay taxes on at least some of their now worthless FTX stock. Now, there was one celebrity who apparently did her homework, Taylor Swift. The story goes she was offered $100 million to be an ambassador. Boy, that's gotta hurt Tom Brady's feelings. Now, Taylor supposedly asked FTX to provide evidence if FTX was legitimate, and the deal fell through. Another story is that several FTX higher-ups convinced Sam to step away from the deal for reasons unknown. Well, pick your own story, but I think it's a fair bet Swifties have Taylor's back. Another takeaway from the case is that the cryptocurrency industry is still in the early stages of development, and for the most part, there's a lack of regulation. This makes it very difficult for law enforcement to track down and prosecute crooks, and it leaves investors wide open to exploitation. As the cryptocurrency continues to grow, it's important for regulators to step in and provide some oversight. Finally, the case against Sam Bankman-Fried also raises questions about the future of cryptocurrency. Now, if this guy is found guilty, it could damage the reputation of the entire crypto industry and make it more difficult for legitimate businesses to operate. However, if he's acquitted, and it could happen, it would send a signal that the cryptocurrency industry is legitimate and that it is safe for investors. So there you have it. Sam Bankman-Fried, the once cryptocurrency billionaire king, who went from industry leader to industry villain, who has lost most of his fortune, and saw his $32 billion company plunge into bankruptcy and become the target of investors by the Securities Exchange Commission and the Justice Department. Well, there you go, my friends. That's life, I swear. For further information regarding the material covered in this episode, I invite you to visit my website that you can find on Apple Podcasts or Google Podcasts for show notes calling out key pieces of content mentioned and the episode transcript. As always, I thank you for listening. Be sure to subscribe here or wherever you get your podcasts so you don't miss an episode. See you soon.